Yet another unicorn has been minted in 2021. It's the 41st unicorn of this year, and it is Slice. The founder and CEO, Rajan Bajaj, now joining us here on ET Now on his big day. You know, they say, I have a dream. For Rajan's dream, it was to be a unicorn before he was 30 years old. He's done it at the age of 29. He's still not 29. Rajan, how does it feel? And do you have a new goal for when you turn 30?
Hey, thanks, Nayantara, for having me here. It's a pleasure to be here again. It's almost it's a bit scary. I don't want to set another goal to have it turn true and then to have set another goal again. So I don't want to do that again this time. But yeah, I mean, it was a foolish moment. Early in January, I was just sitting in my balcony and thinking, what to do this year. This is something I really want to do because I've seen all the great companies in the world, the biggest companies in the world, they have turned $1 billion plus in valuation, sooner than later. So if I follow that same trajectory, we have to be there, right? It's not about chasing a valuation target or anything, but we have to be there just as a goal. And that's when I just thought about it, tweeted about it in 5 minutes, and it happened. Sometimes those things happen in universe. You just focus on one thing and it just happens.
Well, I hope you're also focusing on what's happening at Slice, and you clearly are. $220 million raised from Tiger Global. Tiger is roaring, and how the original believer in India's startup ecosystem is back. Insight Partners has also participated. I believe a lot of noteworthy angel investors, including Binny Bansal himself. What are you going to do with this $220 million?
Right. So this is a large amount of capital than what we have ever raised. We raised about $20 million in June this year. So this is like almost 10 times larger than that. What COVID made us realize is it's always better to have larger capital than probably what you need. And this capital serves that purpose for us. We're going to invest this capital on scaling from here. We have built Slice in a manner from the early days that it's a robust business before it's anything else. But then we started working on our risk excellence, the frictionless product experience, because of which we have been growing fast. So in order to now meet that demand, because the business doesn't need a lot of burn capital, we still need a lot of scale capital to be able to raise debt from capital markets, to be able to grow our GTV. So majority of this capital will go towards that. But also part of the capital will go towards hiring great designers, engineers, product managers, and launching new product lines like UPI, where we want to be the best payments experience for the youth of this country.
So tell us a little bit, because we've also seen Slice pivot a couple of times. You kind of built a name for yourself for being the startup that will lend to Gen Zs, to millennials, to those folks who have never taken credit before. Therefore, it's a very risky business as well.
Right. We have not just pivoted 2 times. I've pivoted at least 6-7 times from the time I started up in 2015. We were earlier a rental startup in the sharing economy space. And that was something that I was really passionate about from my college days. So when I was in Flipkart, I left Flipkart in about 10-11 months time because I wanted to realize that passion, converted into a startup, but it didn't work out. We had 3 pivots there. And then we started Slice in the early days, which was a buy now, pay later product in its earlier avatar. We scaled it to becoming a buy now, pay later plus product with commerce added into it. But at some point in 2018, we realized that merchants in India are still not aware about buy now, pay later being a win-win for them, where they're not willing to pay commissions, the fee that's must for buy now, pay later platforms to work, because at the other side, you want to provide flexibility for customers to pay over 3 months and 6 months. And that's when we pivoted to card, because we saw a huge need in simplicity, in transparency, in just speaking to the customers in their language that was missing. And we started our card product in May 2019, and it's been a wonderful journey since then. We've been growing at almost 25% month on month consistently, even though we lost about 10-11 months during COVID. Otherwise, we probably would have been having this conversation 12 months back. And we think right now where we are very comfortable with that position. We have a very strong growth in front of us and some new product lines coming up. So it's pretty clear compared to all those 5-6 pivots, which were important to make us get here.
Okay, Rajan, you're being so candid and admitting freely that you've had to pivot 6 to 7 times. So answer this one honestly. When you pivoted from buy now, pay later, which is currently a global rage, to trying to disrupt credit cards. Was that because you got an opportunity with Visa, or did you believe that, we can't really do buy now, pay later, everybody's jumping in, or it's not what is being envisaged?
Right. The honest answer is that we did not find success in buy now, pay later. We tried a bunch of things there. We started with a segment which was not being served by regular banks and traditional NBFCs as well, hoping that merchants will see a lot of value in Slice going after that segment and therefore provide us higher commission, which was very important for the business to work. Because globally, if you look at any country, merchants are willing to pay 4% at least to have buy now, pay later work there. In India, because the interest rates are high, you need at least 5% commission from merchants for buy now, pay later to work. But when we saw this huge resistance among merchants where they're not willing to pay 1% commission, 1.5% also, we decided that this is not going to be the time in India when buy now, pay later works. There needs to be a deeper e-commerce penetration. There needs to be a deeper D2C brands penetration, which first builds this model on top of them where they see this as win-win. And that's when buy now, pay later work. So in our journey today, in our part today, 2 to 3 years down the line, we still see ourselves becoming the biggest buy now, pay later product in this country. But right now is not the right time, is what we believed in. And that's why we moved to the card first approach.
So when you move to this card first approach, where you're primarily doing with prepaid cards with for as little as 2,000 rupees per card, in collaboration with Visa, also offering 2% cash back on each transaction. What have been the big lessons that you've learned? Are you sure that this time this business model will succeed?
Yeah, so now it's been about 2.5 years that we have been onto it. And it from the early days, we saw this strong product market fit. But by the time we started revamping our product journeys, launching products like rewards, by the way, we did not launch any rewards when we started card in May 2019. And the thesis was that we wanted to get our experience right before we start giving attractive rewards, which becomes the hook for customers to come and start using Slice. So we got all of those things right. And that's when we started accelerating early this year, where we launched rewards. We launched a superior onboarding experience than anything else that's available in the market. We made the app experience super smooth for people to feel in control about their expenses. And that has been leading to a huge, huge growth for us in this year. We are already issuing more than 200,000 cards per year and growing at about 40% month on month. So we think that product market fit and whether this will work or not is not a question. The real question now is what do we do next from here? Because we feel a lot of responsibility on us being the leading player in the card space. We think that we should also be the leading player in the payment space because we just have 60% of the wallet share of our customers today. We would ideally like to have a larger wallet share of our customers and give them the same experience that they get in card with the launch of UPI and other payments products that are in the pipeline.
The RBI has been quite vocal about all of these products. Its concerns about, whether it is to do with collections, how collections are done, the entire business models around digital lending. The Niti Aayog has recently started raising questions also when it comes to Fintech. None of that impacted valuations. None of that is scaring investors. None of that is making you founders apprehensive.
No, so I think the regulators are right in their approach to this because there are always good actors and bad actors in any industry. And the job of regulation is to protect the citizens of this country from the bad intention and bad actors. So in that sense, we actually want regulations to protect the consumers and as well as protect the good actors from being impacted because of the result of some bad actors, which is a minority in proportion. So we welcome all the regulations that come in this space, and actually that makes it a superior product experience, consumer experience for all the customers, where they're not cheated, where they're not being frauded, where they're not being tormented.
And I've got to ask you this one other question. You are a fintech. Now, fintechs have also been in the news because of what happened with the Paytm IPO, if you want to call it a debacle. Has that impacted other fintechs like you, which were also in fundraise activity? Let me put it this way: were you going to get a similar valuation before the Paytm IPO?
Right. So there's been a lot of talks about the tech ecosystem globally, not just in India, being in some form of a bubble. I think incidents like these makes more than anything believe that there's not really a bubble. If there's a bubble, then everything has to increase in value, right? Nothing should go down. So I think it's a great thing in that sense that there are some companies that are going up. There are some companies also that are going down based on the short-term voting machine that is market. Not everything is going up, but I think in the long term, the weighing machine, comes into place, which is how markets behave in the longer run, and the best companies will do really well. But I think it's actually a good thing that there are always some companies that go up and some companies go down. Some of them may not be just because of what they are, right? As a company today, it just could be sheer unluck, bad luck on their part. But it may not be just related to the business right now. And I think it's finally the long term that matters. But it's a good thing for the markets to see that not everything on the block is going up and up and up.
Good reality check is the sense I'm getting from your answer. That's what you're trying to say. Now, Slice has also been pretty clear. What it's trying to do is, Gen Zs, the millennials, but even the older folks, who may never have taken a digital loan. Your entire population with credit cards is anyway 35 million, right? How many Indians have you introduced digital lending to and cards to?
Well, the population today is 35 million, but we have high hopes from this population becoming large and large over the coming few years because of the UPI ecosystem, which has brought a lot of customers doing digital payments. I think many of those customers will realize that interest-free product for 30 days, 45 days, or a product that gives you rewards over time is better as a consumer experience for you, and will move towards that. So that 200 million population that starts using these digital payments over the next 5 years, a large proportion of them start using credit cards or BNPL products. So we see that 35 million population going to 150 million in the next 5 to 7 years. That's almost like 400% growth in that market, and we see that in the last 10 years, that's the biggest growth that has happened in any large economy globally in this population, the credit active population. And we see Slice taking a very, very large slice of this market over the next 5 to 7 years. Today, we have more than 5 million registered users already, and we are growing at 40% month on month.
You're growing 40% month on month when a low base effect is at play. How will you keep the momentum growing? And something else I wanted to ask you, are you going mainly in the urban areas? A lot of your growth, is it coming from the smaller towns, or is that something you're going to look at?
Sure. It's the way you measure it that would tell you whether it's a base impact or not. We do think, in some ways we are still very small. We're issuing just 200,000 cards a month. I think the ambition is to, at some point, issue 1 million cards a month. So there's certainly a base impact. But if you look at traditional players also, we are in the same order of magnitude. It's not way lower than any of the traditional players. We are largely present in about 300 cities, but the goal is to expand to other cities as well. We today miss out on many customers because of geographical constraints and credit risk constraints. And for those customers, we are going to soon launch UPI, which will allow them to start using Slice, do seamless payments. The same experience that we got for card will also come for UPI very soon. So these customers will make Slice as their primary payments app, not just for card, for UPI as well. And we start seeing more data on these customers, and some of them will start getting credit lines very soon in 3 to 6 months' time. So we're very excited about that product launch and going after many more cities in India, because we see massive opportunities, not just in metros, all the cities in India.
Can you elaborate a bit on that? Because UPI will of course be a game changer. Credit on UPI is considered to be the next big thing in fintech. Tell us a bit more about your plans.
Sure. So we are launching a UPI product, which will allow our existing customers who are doing 60% of their payments on an average on Slice for all their payments that they do. With UPI, they'll be able to scan all the QR codes that are available in the market, pay to their friends also using Slice app itself. We are also going to adopt some of the new technologies like digital mapper, the PPI and UPI regulations to make all of this happen. And this product will also be slightly more faster and will have higher success rates than what is available in the market out there today. So at the end of the day, we want to make sure that every half a second that a customer spends on payments experience, we are able to figure out one or two small usable items there, delightful items there, and delight these customers and make their experience much more shorter in the time that they end up spending. Because these customers value their time much more than anything else in life. They would rather relax, they would rather learn something, they would rather be creating wealth for themselves than spending time in understanding the gotchas and going through payment failures. We want to solve all of those problems one by one. If the transaction takes on an average 15 seconds and we solve one problem in each of the half seconds, we would have solved 30 problems. And each of those iterative changes will make the product exponentially better for all these customers. As they start using us for all the transactions, the waitlisted customers start using us for their regular transactions. We get more information on the customers, we give them credit line, and our existing customers are able to aggregate all their payments at a single place, and they love that payments experience even more than what they do today.
But tell me something, as you grow and you want to launch new products, including with UPI, how do you have your checks and balances in place to make sure that those who deserve that prepaid card are actually getting it? Because, you don't want a problem tomorrow where you owed a lot of money, it becomes a big problem, NPAs start ballooning.
Sure, absolutely. That has been the building block of Slice. We've spent now more than 4+ years just to make sure that our risk excellence and our superior data science capabilities allow us to get where we are. Launching a 2,000 rupee limit card is not just about launching it as a product. It's as much as about having the right data science capabilities to be able to assess the customers, to be able to operationally manage this type of growth with smaller limit customers. Because we see many of those customers graduating into a higher limit over time. So all these capabilities that we have been building, Nayantara, from last 4 or 5 years are now coming in handy, and that's where we create a lot of value. Slice is not just a great consumer product; it's also a very solid risk product at the back end, where we have built a very solid culture, very data driven. We do a lot of experiments. Like, our philosophy is that we don't know what will work, what will not work, but we figure it out by experimenting with a small set of customers and then implement that in our base policy. And that has been working out very well for us, even during 2 downturns, 2 bad cycles, and multiple mini cycles in between, with some crisis in NBFC, some investor sentiment going wrong in COVID, during ILFS, etc. And we see that to be continuing in future because we have been stress tested. It's not something that we're doing for the first time in the last 1 year. We've been doing this from 4 or 5 years now.
I'm going to end my interview with exactly the way I started it. And on a personal note, Rajan, you've pivoted 6 to 7 times. You had a dream. You've pretty much lived that dream, right? You're a unicorn at age 29. You don't want to announce your goal for what you want before the age of 30. But tell us, how does a 29-year-old founder celebrate a milestone like this? Especially, the threat of what's going on in a pandemic, etc. Would love to know that.
So I'm super proud of my team. The first thing that I did a call with them and just congratulated everyone, thanked them for their hard work. I think at the end of the day, we are all just, in a way, creating something back for what we have taken. Like, we are using all the technology like smartphone, all these apps, the internet. Someone has built that. A team has built that. A person has come up with that idea, and they've made it happen. And we are enjoying all those benefits today. We can't meet those people. We can't meet most of those people. But the way to thank those people is just to create something which will be used by their families, their children, their relatives, their well-wishers in the next 50, 100, 500 years. And that's what motivates us at Slice. That's what motivates the young team that we have. Our average team's age is 26. Our customers' age is 27. So we're really creating products at the end of the day for ourselves. It's like we're creating music for ourselves, and then we're attracting all these other people who would love to listen to that music, who are similar in nature that we are. And we love doing that. That's how we celebrate, by creating more music.
Wow. Great to hear. I mean, wow, average customer age is 26, average employee age is also about the same. It is certainly a very, very young startup and a very young unicorn with a young founder. Rajan, from the entire team at ET Now, wishing you all the very best.
Thanks a lot, Nayantara. Wish you the best too.